Hey there, and welcome to today's episode of Is It Taxable? My name is Nate Matherson, and I am your host. And on this episode, we have a very special guest, Peter Nisnik, head of SaaS revenue at Numeral, the sales tax compliance platform. Peter, thank you so much for coming on today's episode.
Of course, Nate. Thank you for having me.
Yeah, and I'm excited to just dive right into it and ask you all of my pressing questions about sales tax in regards to SaaS or software as a service. I've been a founder for, I don't know, too long, about like 10 years. And most recently was building a SaaS company. And as a SaaS founder, the last thing I wanted to deal with was sales tax. Every time I logged into Stripe, they were telling me I was doing something wrong. I never really understood it. And so I have just a whole bunch of questions to ask you to hopefully get to the bottom of sales tax for software companies. Does that sound good?
Awesome. Sounds great.
So a question that I had as a founder, and I think a lot of other software founders have as well, is at what point in their business does a SaaS company actually need to start worrying about sales tax?
Yeah, and I think that's a great question, Nate. So I think SaaS companies should really start considering sales tax as soon as they start making sales in multiple states, or when they hit what is called a nexus threshold. Okay, most states require collecting sales tax if you exceed a certain amount of revenue or a transaction volume of sales in that specific state.
And so you mentioned there's just to play it back to you, there's two different types of nexus that software companies need to be aware of as they expand into multiple different states. There's physical nexus, which I think you said means having an office or an employee in a state, but then there could also be economic nexus, which means a certain amount of transactions or a certain amount of revenue in a state means that all of a sudden we need to start worrying about sales tax in that state. Do I have that right?
Yeah, and that's what really begins the complexity of sales tax in general. So you mentioned there's that physical nexus component. So you have some sort of physical presence, right? So you have an office, a warehouse. You've hired an employee in this remote world. That would trigger what is called physical nexus. And then economic nexus is what I had previously mentioned, which is about number of sales in a specific state or a dollar amount of revenue. And once you cross those thresholds, you need to start applying a sales tax to a specific sale and also filing in that specific jurisdiction.
Okay, I have a couple quick questions. We're going off script already, Peter. So I know a lot of software companies, especially like in this era, have a lot of remote employees, possibly even employees in like 10 or more different states working remotely. Does that mean that like they could have physical nexus in all of those different states where they have a remote employee, even if it's just that single remote employee in that state?
So, it's really state dependent, but I think the overarching theme here is sales tax is very complex, right? So I think the easiest answer for you today is yes. You can have one employee in the state of Utah. You can have no sales as a startup in the state of Utah, but you've crossed the physical nexus threshold because that employee is in Utah, and therefore you need to start filing and applying taxes to sales that you may have in Utah, right?
Yeah.
And that's like the complexity there.
Okay. And once we hit nexus, like say, for example, I think in New York, it's 500,000 in sales.
Yep.
Once we like cross 500,000 in sales, do we, and this was a question I could never wrap my head around. Do we all of the sudden owe sales tax on the first 500,000 in sales, or is it like future looking? Like we only need to collect sales tax for sales beyond 500,000 once we've crossed that threshold?
Yeah. So again, like a complex layer of just kind of like unknown in the sales tax world. But if we use New York as an example, once you cross that economic threshold of $500,000 in sales, every sale moving forward, you will need to apply that tax to that sale.
Okay.
And you need to register in the state and say, hey, now I'm filing taxes moving forward in the state of New York.
Okay, so I actually need to register in each state after I have Nexus. So if I have Nexus in 20 states, that means I need to do like 20 individual state registrations. That seems like a lot of work.
Yeah, quite a bit of work. So it's not even the work that is required to register. It's the time that you're allocating to figure out how to register. No one
Yeah.
state's the same, right? So in 20 states, some may require you to email, some may require you to go in person, some may require you to call, but you need to get registered in any state where you've crossed that threshold.
Okay. And how often should we be checking in on these thresholds? Is that like a weekly to do? Is it an annual to do? Like, how often is it worth checking our Nexus thresholds?
Yeah, I think as long as you're increasing your sales as a business, as a startup, right? You want to be checking to see where you're at from a Nexus obligation perspective, right? I think at the very minimum, you want to check this monthly or quarterly, right? But these tax laws, they change so frequently. So consistent like audits of your business are very important to make sure you're not missing anything from a Nexus perspective, and that's where it comes in. It'd be super helpful to have some sort of tool that automates and does that on a business's behalf, just so you don't have to allocate time to do those manual audits.
Yeah, I mean, speaking of changing sales tax laws, I think in 2024 there were two new states that
Mm-hmm.
implemented legislation to tax software sales. Do you know off the top of your head how many states are currently taxing SaaS?
So I believe the total number, and I will need to triple check this because you and I have now both mentioned that it changes so frequently, but I believe the number today is at 27 states. So it's generally in that like 20 to 30 range. So obviously, not every state currently taxes SaaS, but we're moving in that direction.
Yeah, and I mean, you've been in this space for a number of years. I know it's a hard question to ask, but are there like one or two states that we might want to pay special attention to as a growing SaaS company?
Absolutely, that's a really good question. So I'll give some like positive news as one state. So a lot of the tech companies in the world today sell to California businesses, right? So you're selling into California. California doesn't currently charge sales tax on SaaS today. So you don't need to register and you don't need to file and you don't need to apply tax to any sale in California, which is a huge positive for startups, tech companies in the world today. Okay. On the flip side, there are some unique tax rules. So let's take Illinois, for example. Illinois does not charge sales tax for SaaS today. They do not require you to apply tax to any sort of sale, but the city of Chicago does. So there's a county requirement within the state of Illinois. And it's a similar thing for like the state of Colorado. So Colorado does not charge sales tax, but the city of Denver, the city of Boulder, they do. So if you're selling into that granularity of that specific city, they do require you to charge sales tax for your sales.
That's so crazy. So just to play it back, so at a state level, Illinois and Colorado don't tax SaaS, but there are localities or counties within states that could have different sales tax laws than the states themselves. So not only do we need to be compliant at a state level, but we also need to be compliant sometimes at the local level. Is that right?
Yep. Yeah, you got it exactly right. Yeah, I think that's, again, we continue to talk about complexity today, and that's part of the issue and kind of like the obstacle that growing businesses have to deal with, because it's not only state level regulation, sometimes it can be county and city level, like you mentioned.
Okay. And there are also digital goods like a digital download, maybe subscribe to some course, or you've sold some printable document, whatever it might be. There are digital goods that are not software. Are those two the same thing? Like, are digital goods and software treated equally, or do states have different laws on whether it's SaaS or a digital good?
Yeah, great question. So they actually aren't treated the same. So some states or jurisdictions categorize SaaS as a service and digital goods like an ebook, like you mentioned, or like a software download as tangible personal property, right? So they wouldn't consider that a SaaS good, which in theory then they would not need to tax that specific good, right? Other states will consider that SaaS, and you will need to apply a tax accordingly and file accordingly. So overall, like the treatment varies based upon the jurisdiction. And again, we continue to talk about the complexity of the sales SaaS tax world.
Yeah, it's pretty complex, but this has been pretty helpful thus far, Peter. So I was actually catching up with a friend who is the CEO of a Series A startup based in New York. And they're doing well. I think they're, creeping up on 10 million a year in revenue. And they said to me, I was like, hey, are you guys thinking about sales tax in New York? And they said, Nate, like we have Nexus in New York. We know we have Nexus in New York, but we're just like not gonna worry about sales tax right now, and we'll like quote like clean things up at the Series B. And so I guess my question here is, like, what happens if a software company gets it wrong, or they haven't been collecting sales tax after they've established Nexus in a state? Like, what could go wrong, or what should companies be aware of if they kick the can down the road?
Yeah, great question. So unfortunately, this is kind of like the really scary part of owning a fast growing business, right? If you're not paying taxes, you're not registering. And in this example, like your friend that you caught up with recently, states can impose fines. They can impose interest, which accrues on the unpaid taxes. They can require you to file and have to pay back taxes for any sort of missed sales tax obligations. So it can become a very expensive problem very quickly for your friend's business, which it sounds like it's growing really quickly, right?
Yeah. So, I mean, in this example, like say they have like 5 million in taxable sales, but they didn't collect sales tax on it. And I think in New York, like, I mean, I think the combined rate is in the eights. I think it's about 8.5% combined. If say they've done 1 million in taxable sales, but didn't collect tax, but they should have, and that tax equates to, let's say, I don't know, 85 grand, and they didn't pay it. Now they need to pay it. Plus they might need to pay penalties and interest on top of that 85 grand. So they've actually like created a liability for themselves. Is that right?
Yes. Yeah. And I would really call it like an accruing liability, right? Because the state will generally charge some sort of interest based upon the filing frequency. So if New York is a monthly filing frequency, they're going to accrue interest each month they didn't file. And again, that becomes a huge liability for a business.
Yeah. No, I mean, it sounds like it's only gonna get worse for my friend's company. Hopefully they have a big Series B, I hope. I mean, okay, as far as like, I want to ask a really like tactical question. So I know like a lot of SaaS companies, they will bill via a platform like Stripe with a credit card. Other times they will create like invoices in Salesforce and deliver the invoices that way. Do I have it right that regardless of if it's being billed on Stripe or if it's being billed via a manual invoice, we need to present a tax rate and collect tax in both of those scenarios? Is that right?
Yeah, that's absolutely right. So think about it like regardless of payment method, sales tax needs to be included on all invoices. So credit card, invoice through their CRM, et cetera. Any sort of sales item invoice that happens, there needs to be sales tax included.
Okay. So for a SaaS company that's billing through, 2 or 3 different billing systems, depending on the customer, they need to have all of those systems, I guess, need to talk to one another intelligently to be compliant. What, in your experience, like what integrations are typically most important for a growing SaaS business?
Yeah. So I would say, any sort of billing integration. So we can start with, something as useful as like, Shopify, Stripe, right? Those are like very well known, widely used payment platforms in the tech world, in the SaaS world today, right? So Stripe, Shopify, PayPal, et cetera. These types of payment platforms power a business to be able to accept a payment. And it's really important for your tax partner, your sales tax partner, to be able to plug in to those payment platforms and to be able to apply an accurate tax rate to the sale, right? There's other accounting tools and invoicing tools, so QuickBooks, NetSuite, just to name a couple today, that are really important also for your sales tax partner to be able to plug into, because we need to be able to ingest that information in live time to be able to create an output for our customers that basically showcases we recognize that this dollar amount needs a sales tax applied, and because of where this item is being sold, we know the correct tax rate to apply to that sale, and do all of that in live time for our customers.
Makes complete sense. And I just thought of a scenario I want to run by you, which might, I feel like we keep saying the word complex. It might make things more complex. What if I have customers, internationally, like say, for example, I have a customer in like the EU or the UK or somewhere that's not the United States. Are there additional considerations for SaaS companies that are expanding globally?
Yeah, so I think let me follow up your question with a quick question. If a international company is selling, are they selling to U.S. states, or tell me a little bit more about what you're thinking there?
Oh, so I meant like it's a U.S. based company, but they have customers in France, for example. Are there international sales tax considerations that need to be made when selling for a U.S. based company that's selling internationally?
Yes. So we talked about complexity. This just brings it a completely different layer of complexity. So countries have their own nexus thresholds as well. So we talked about what the U.S. has some requirements, jurisdiction by jurisdiction. There's also global requirements. So some countries say after your first sale in our country, we require you to start filing or registering and filing in our country, right? In other words, you need to start applying a tax rate to a sale after your first sale, right? Some have different thresholds, similar to what we discussed today with different states. And also, even more complex, some countries require you to have a physical presence in that country to actually register and file for that country.
Well, Pierre, we might need to have you back to do an entire deep dive on international sales tax law. But, I got a couple more questions before I let you go. Is there like one or two like big misconceptions that people have about sales tax that you can share?
Yeah, I think like the biggest one that we hear a lot of numeral is economic nexus, or just nexus in general. It doesn't really apply to me as a small company, right? And I think the biggest concern, and honestly, why customers really like us the most, and the way that we charge any sort of service or fee, is very simply put, the most important part in your sales tax journey is knowing where you are from an exposure perspective in live time. And Numeral doesn't charge our customers today to be able to track their nexus for them. So any small company, before they've even made their first sale, can sign up with Numeral, plug in their billing tools, plug in their payment processor, and we can give them an understanding of where they are on their nexus journey in live time. So this enables them to understand, I'm selling in California or I'm selling in New York, right? And there's thresholds that Numeral is letting me know if I'm approaching or crossing, so I can ensure that when I need to register, I can do that in live time in an accurate period of time, so I don't incur those penalties and accrue liabilities that we talked about earlier. And I think that's the biggest misconception that we have seen, and why we've positioned our product the way that we have.
Okay, so you can actually use Numeral's free product to just get a sense of like where you are in that journey. Do I have that right?
Yeah, you got that right. And I think we also did it that way because a lot of the traditional tax providers, they charge a fee for that, right? If you go to an accountant, you want to understand where you're at from a nexus perspective. They're going to bill you for that. That is a service that they are providing for you. We've kind of flipped that on its head, and we don't charge anything for that service.
That's crazy. When I was a SaaS founder, I actually asked our accountant about this, and I think they quoted me like 2 or 3 grand just
Yeah.
to tell me where I potentially had exposure. So
Yeah.
that's really cool that Numeral does that for free.
Yeah.
Well, how can folks get in touch with you if they want to chat about
Yeah.
sales tax and SaaS?
Yeah, of course. So a couple different ways, our website's just numeralhq.com. And that's a great way to be able to interact with someone on the Numeral side in case you have any questions, in case anyone has any questions about Nexus, sales tax, or anything related to either of those things. They can always reach out to me directly. My email is very straightforward, peter@numeralhq.com. I'm always happy to be a resource for anyone who just is curious about their sales tax journey today.
Well, yeah, we will include a couple links in the show notes to the Numeral site, your LinkedIn, and we'll also pop your email in there for all of the listeners and viewers today. Well, Peter, thanks for coming on. Is there anything else you want to say to the viewers?
No, Nate, I really appreciate your time today. I think, I get excited about talking about this space, which I think traditionally was not a very exciting space to talk about, but it's a very important piece to a growing business. So I appreciate you having me on today.
Yeah, I mean, I'm gonna send this to my friend right after this. I think they need to take sales tax seriously.
Yeah.
All right, Peter, I'll talk to you soon, and we'll have you back.
Yeah, absolutely, Nate. See ya.